There are a couple of common misconceptions around what gifts are for tax purposes. Gifts are different from charitable contributions, and they have drastically different tax consequences. Gifts are a transfer of assets, typically cash, from an individual, called the donor, to another individual or a trust, or the donee. While charitable contributions are a transfer of assets to an organization that is designated by the IRS as a qualified charitable organization. Unlike charitable contributions, which may be deducted on an individual's income tax return, gifts are not deductible in this way. A common misconception around gifts is that the beneficiary of the gift, or the donee, must pay tax on what they receive. Actually, if any tax is payable, the donor would pay the tax only after determining if the gift tax rules come to play. Due to the current annual gift exemption and lifetime estate exclusion, gifts are rarely taxable to the donor, and this can be an important part of estate planning. Any amount given over the annual exemption triggers the tax rules with respect to gifts. This annual exemption is indexed for inflation, and in 2022 will be $16,000 per donee. If a gift exceeds this exemption, you need to file the Form 709 gift tax return with the IRS. If you are married, it is possible to give more than $16,000 to one person and stay under the exemption limit for the year. Married persons can elect to split gifts with their spouse to double their annual exemption. That means for 2022, a married person can gift assets worth $32,000 per donee with the gift splitting election. Even better, there is an unlimited exemption if you pay a donee's tuition or medical expenses for them. Important here though, to qualify for this exclusion, these amounts must be paid directly to the institution providing the service to be excludable from the gift tax rules. Even if donor gifts exceed the annual threshold to an individual, the consequences of filing the Form 709 aren't significant for most. The portion of gifts over the annual exemption, the $16,000, go against the donor's lifetime estate exclusion, which for 2022 is $12,060,000. Very few people have this kind of wealth to transfer, so gifts are almost never taxable. As such, gifts should be an important part of a person's estate planning with their financial advisor.